A couple of housekeeping issues. Just wanted to alert you to Salvation Army clothing drive that our team is going to be hosting. If you are interested in donating any clothes, it's not going to be household items, just clothing. They are in real need of, kids, any type of clothing really. What you can do is you can register at info@thehanlonteam.com and contact us or give us a call at 905-271-5141 to register. And what we'll be doing is somebody from our team will be coming around on July 9th between 1 p.m. and 3 p.m. to pick up the clothing, and we will take it directly to Salvation Army for donation. So if you'd like to participate in that, reach out to us, give us a call, and then have the items on your doorstep by July 9th. The other thing is our annual garage sale in Erin Mills and Central Erin Mills. Obviously that is delayed. We will be hosting that at some point this year. It's where we bring garage sale signs around to your street and to your driveway in case anybody's getting rid of, wanting to purge all of that stuff that they've been going through and staring at for the past couple of months. I know I've got a ton of it, so I need to get going on organizing for my garage sale. Anyways, without further ado, I'm going to pass it over to Andre Persaud to talk about mortgage and lending.
Hi, everyone. So thanks for having me, guys, tonight. So I was trying to think about what to talk about with regards to the mortgage space. And I was thinking, CMHC put out this big announcement recently that they're changing just how the way they're going to start underwriting files. And so I wanted to kind of just provide some clarity surrounding that, just because, it came out in the media and there wasn't a whole lot of detail attached to it. So I want to be clear on this. So the change that CMHC had made to their underwriting guidelines is strictly for these high ratio or less than 20% down mortgages. If you're putting 20% down or more, this has no impact on you whatsoever. Now, the interesting thing with their rollout, so basically their rollout was that they're just tightening up on how they're underwriting their files, and just the income to debt ratio, they reduced what that had to be. And so I did a number of calculations on this. And again, I'll reiterate, this is for people putting less than 20% down on a purchase. And their change basically would have reduced people's buying power by roughly 10%, give or take a couple of points there. But again, roughly reduce their buying power by 10% in terms of purchase price. However, CMHC is not the only mortgage insurer. There are two others, Genworth and CMHC. It was expected that Genworth and Canada Guarantee would follow suit because historically speaking, they've all kind of shifted along the same pattern. But what happened yesterday morning was Genworth and Canada Guarantee came out and said that they are not going to follow suit. So to try and give a little more context there, if you're putting less than 20% down on any purchase, yes, you have to get approved from the bank for a mortgage, but you also have to get approved from the insurance company that's going to insure that less than 20% down mortgage. And there are three insurance companies that you can go through, CMHC being the biggest one. And then there's Genworth and Canada because Genworth Guarantee didn't follow suit. This whole announcement is somewhat of a non-issue right now, right? So it's hard to use the term, business. Not going to impact those people putting less than 20% down on a purchase because those other insurers did not follow suit. So really, if you had that pre-approval in place that you had, a month ago, 3 months ago, 6 months ago, a year ago, it still rings true as long as your income and your debts and everything have remained the same. But it is an important thing that they announced that we are not following suit. So as of today, as of right now, the change is not there. It's only with CMHC, and we just don't have to go to them. We go to one of the other two guys, and we qualify under the rules and regulations that have always been in place.
All right, thank you so much for that, Andre. And we'll actually go to Sean next to give us some market updates in Erin Mills.
Before we jump into the stats for Erin Mills, I did want to give everyone an idea of what's happening in terms of showings and offers. We've really seen that activity rise, really, I would say since about a month and a half ago, but really in the last couple of weeks. So we're just going to go through that quickly here. Just give me a sec. So I see that the screen sharing is disabled. So if that could just be enabled, that would be awesome. So really the showing activity that I'm going to go through, it's across the GTA. And really what we've seen is the showing activity has actually gotten pretty close to the pre-COVID numbers. So let's just go through this here. So the blue, again, this is over the last 90 days. This is our showing activity. We can see the last week here, the week of June 9th. We actually got to a high of over 11,000 showings, which is amazing, considering, really about a month and a half ago, we were looking in sort of the middle end of March here, averaging about 14 to 13. If everyone could just mute, that would be great. So yeah, I mean, this tells you kind of all you need to know in terms of buyer activity out there. For the most part, the buyers have come back. They're active, they're ready to make offers, and they're out there seeing property. If we look at the offers down here this last week, daily 388, 400, over 500, 400, 350. It's a really stark contrast from kind of just after COVID, where our running total daily was, just in the hundreds here. So really the daily amount of offers is almost tripled and quadrupled in some cases. And you can just see at the most recent part of this blue graph here, showing activities, it's back and it's pretty much at the same level that we saw pre-COVID at the beginning of this year. This just gives you another idea of the last 30 days, what that trend looks like. And then month over month, so this past week compared to the same week in May. Again, it's just a really stark contrast, almost 7,000 more showings here on this Friday compared to the week before. And then again here, month over month, showings are up over 100%. Really, these big figures here, they're all above 100% across the board. So what does that mean to you as a seller? It means that there are a lot of buyers out there, a lot of motivated buyers out there, and they're ready to make offers on property. This is for Erin Mills, south of the 403. I'm going to throw this to Peter after, and he's going to talk about Erin Mills north of the 403, more so around the Erin Mills Town Center area. We're going to start with condo apartments. So this is 2019 here. So this is from May 15th to June 15th. So really the last month. And we're going to compare the 2019 figures with the 2020 figures. So this is the 2019 figures. In that time frame, there were 16 sold last year. That sold for an average sale price of just over $450. If we compare that to this year, the units are only down by a couple, but if you look at the average sold price, way up here at $666. And I think that's really a good indicator of what we're seeing in the condo market, not just in Erin Mills, but really across many of the cities, Mississauga, Toronto, Oakville, Burlington. That remains one of the hottest property types right now, with lots of multiple offers and lots of interest. It's really that starting point for both end user first-time buyers as well as investors. So the amount of demand for those property types, it continues to remain high. If we go down here to townhomes, so again, these are the 2019 numbers. So in that mid-May to mid-June timeframe, there were 17 solds with an average sale price of $589. And then if we jump ahead to this year, again, units down by only a few, but average sale price way up to $666. Again, the townhome market, not as hot as the condo apartment market, but again, very competitive right now. It appeals to both investors, first-time buyers, and move-up buyers. So you've got a whole host of different demographics who would be looking at this price point. We're really seeing that those prices drive up in the townhouse market. If we go to semi-detached next, and again, for anyone who's just joined us, this is the Erin Mills neighborhood just south of the 403. So last year in 2019, from mid-May to mid-June, there were 10 units sold for an average sale price of $722. And if we jump to this year, only 6 units, but way up in terms of average sold price of $836. Also a higher average list price as well. So, you know, it might indicate that the type of semi that is going on the market may be a little bit more valuable. You know, it may be more renovated properties. But again, it's just such a big difference in average sale price that even if the property type is a little bit more valuable in and of itself, there's still a lot of appreciation we're seeing there. The detached market was interesting for this time frame. So at this time last year, 23 units, so a busy 30 days with an average sale price of 1.13. If we jump to this year, units are down almost in half, down to 13. Average sale price down as well. This is in line with what we're seeing with the detached market. Not everywhere, but it's not uncommon to see the detached market a little slower right now. You know, across the board, obviously this Erin Mills example is not showing it. Across the board, you're still up or at least even in most areas. But we are seeing it a little slower. It may just be that the price points that are lower, a lot of those buyers have sort of come back out. The higher price point buyers may still be on the sideline. Oftentimes buyers who are buying at this price point do have a house to sell as well. So there's a little bit of hesitation from that perspective. They may not want to put their home on the market right now, again, due to COVID and having people through your home. So just some insights into those. That kind of wraps it up for Erin Mills south of the 403, and I'm going to pass it on to Peter now.
Great, thanks, Sean. I'm just going to do the same. Just before I get to the shared screen here, we're seeing similar activity in north of 403 in Erin Mills as of south. We're seeing high activity in offers on especially that comfort price zone, somewhere in that 500 to 800,000 price zone. It's I'll get into an example of one when we get to the stats, but that I just heard about yesterday. Oh, way too many screens open. There we go. Share. Okay, can we all see that? Yeah? Okay, great. Okay, so I'm going right into townhomes. So having a look here at 2020, we had only 4 units for sale, and we have had a really low inventory level in central Erin Mills all the way through COVID. We are starting to see an increase in volume in the last few days. However, we're not going to see that until the next reporting period. So we saw 4 homes sell with an average sale price of $674. And if we go to 2019, this time last year, we had 20 homes sold compared to 4, so a significant difference, which is quite the normal sales ratio for this time of year in central Erin Mills. And we saw an average sale price of $667. So we did see a slight increase. However, there's a few sales that have just occurred in the last few days that haven't been reported. One yesterday that had 16 offers on it. I talked to the listing agent, and another agent had about 4 or 5 offers on it. So like Sean mentioned, the offer numbers are way up, and the inventory is still low, and there's a lot of activity, a lot of people looking because of the affordability, as Andre mentioned earlier. We'll go to, so there's not a whole lot of freehold townhomes in north of 403 Central Erin Mills. There was one sale, which was listed at 812, and it showed quite well. Actually 2, pardon me, and they both showed quite well. Going to semi-detached homes. Again, not a lot of inventory has come on. This is 2020 numbers. We saw one sale come on at 867, which is on the high end for semi-detached homes in the neighborhood. And I'll go to, this is 2019, and there was only one sale as well. So at a sale price of 747, that was a 16% increase. It's the other one, the one that sold at 867 was on the higher end. So maybe 16% isn't indicative of the real difference in price, but it certainly is a high percentage rate price difference. We go into the detached now. We're going to see that the average sale price for the 5 sales in 2020 in the last since mid-May, 1.328,700. That's on the high side. We've had a couple of homes that are on the larger side in Central Erin Mills that has helped us boost the price up, because as you see, when we go to 2019, we had 14 sales at $1,022,000, which is a little bit on the lower side than the last reporting cycle we did. So that's actually a 23% increase from year over year. However, if you factor in the different size homes, it's probably closer to 15, but that's still substantial, 15% increase year over year. So I think overall, in general, what we're really seeing here is not enough inventory. Homes that are coming on are selling quick. So for sellers especially, it's a great time to get on the market, and the buyers are just waiting for those properties to come on because there's not enough inventory. Trina, back to you.
Great, thanks Peter and Sean. So it looks like we're starting to see a lot more activity from not only sellers, but really from buyers too, would you say, guys? And is that because we're kind of getting used to the processes of wearing masks and gloves and just feeling a bit more comfortable with the process that we've changed around the COVID precautions? Would you say that's what's increasing the activity?
Yeah, I think from my experience, the first sort of 30, 45 days of COVID, there was just a lot of unknown. We really didn't know how serious everything was, what were the risks, and, a lot of people just didn't know what to do. We were very confused. But I think as the weeks and months have gone on, we sort of have an idea of where everything is at. We understand, kind of the whole COVID thing a little bit better. And yeah, masks and gloves seems to be the norm right now. I'm going through them like hotcakes with every showing, switching my gloves and masks. I don't see them going away anytime soon as well. So again, it might be the normal for a bit. I also know that this year was gearing up to be a very, very busy year. February and the beginning of March were very busy, and a lot of those buyers sat on the sidelines kind of from the middle of March to end of April, again, due to the unknown and the confusion with what was going on. But most of those buyers, they're back, showing activities back to pre-COVID levels, and we're just waiting for the sellers to follow suit. Understandably, I think they're a little slower because it's different to go into someone's house rather than, let 10, 15, 20 people into your house. So I totally understand that. But I do think those sellers, although lagging behind, they'll start to hit the market when they understand what's really happening with all the buyers out there.
Mm-hmm. Yeah, and as I agree, and as people get comfortable and more comfortable with what's happening, like our spring market didn't happen this year. And there's always people having to sell, company transfers, spouse dies, whatever, you need, or your family's growing, your family's getting smaller, whatever. So that spring market has to hit at some point going in the future. We do have a question from somebody here for Andre. Andre, do you think that the interest rates will go up this year?
So, I mean, personally, I don't think rates will go up. Again, I've been doing this well over 10 years now, and we don't have a pandemic to compare things to, right? But I mean, if we want to take the most, recent comparable, we can look at the 2008-2009 financial crash. And after that had happened, and I think that it's a decent comparable in the sense that, we're all hearing about businesses that might struggle to reopen or, can't reopen. I can't see the government or the Bank of Canada increasing rates on anybody anytime soon, especially because, those rates are tied to these individuals that own these businesses, and they're already going to be struggling to get back on their feet and get the businesses up and running and get everything going again. They can't increase interest rates, I don't think, anytime soon. I would think, if anything, they're going to fall or flatten out. And to give you some context there, variable rates are tied to prime rate. And after the 08-09 crash, prime rate did not go up for over 5 years coming out of that. So, we don't know when we're going to come out of this pandemic of COVID from a health standpoint. But I do think that whenever we do come out of it from a health standpoint, there's going to be a financial shadow that's cast for months, if not years, to follow. And I think given that, rates should stay fairly low. And if anything, go down and not go up.
Mm-hmm. Yeah, definitely makes sense. Does anybody have anything else to add, or any other questions from any of our guests tonight? No? Okay, we're going to stay around for another minute or two just in case anybody has any questions, but I just wanted to remind you again about our Salvation Army Drive on July 9th. Give us a call or email us if you wanted to participate. And if you ever do have any specific questions for your property, for purchase of an investment property, for buying anything, what's going on in the market, even if you just wanted to get an update of what's my property worth today, so that, depending on what happens in the world, you can get a future update for your property in the future, and then you have something to compare it to. It's kind of like a benchmark for your biggest investment of your entire life. So if you ever want that from us, even if you're not selling in the interim right now, then feel free to reach out. We'd be more than happy to come by and give a quick look and give you an update. So, okay. So we're going to hang around. I just want to thank everybody, all the guest speakers, for coming out tonight and giving us this great information. And I wanted to thank all of our guests for spending the time, taking time away from their family just to listen in to us. So, okay. All right. So we'll hang around for any more questions. And again, if there's anything we can do for you guys, we are here. Okay. Have a great night. Enjoy the sunshine this week. It's going to be beautiful.